If you want to find out more about some of the areas and the foundations that Jonathan set up and running, please do get in touch. So I'm hoping that we've got the next panel here. I can see we've got Titus all ready to go, and looks like we've got at least one other panel there, so fantastic. So can I invite you, I'll invite you up on stage, and then I'll introduce Titus, and then Titus is going to introduce the panel members. So this next panel, if you're thinking, hanging around outside, please do come in. Please do come on in. This is a banking panel entitled, "This is Africa's Century, an Overview of Africa's Economic Emergence." So some familiar faces. Sanjay, you're coming up. How are you?
Good to see you.
Good to see you too. Always good to see you.
Yeah, all right.
Thank you, welcome. So welcoming our panellists, fantastic. So whilst they're getting settled, and hopefully we've got enough microphones around, I'm going to introduce Titus. He's sat in the middle, pouring the water. Titus works for Rand Merchant Bank. He is the Africa head of financial institutions, diplomatic organisations and sovereigns coverage. He's got over 16 years experience working in financial markets, spanning global markets, treasury and risk management across the whole of the EMEA region. He's actually, if anyone's seen he was actually quite hard to profile, but he's got a graduate qualification in nuclear engineering. So I think that probably formally makes you a rocket scientist, doesn't it? Something. So I think that's amongst other qualifications. So very, very bright, qualified individual. And outside of that I've just learnt this morning, he's a cattle breeder, a special form of cattle breeder, and that's his passion. So absolutely. See, like, I always try to bring something that you never knew about these individuals. So, but on the formal side, he's leadership for financial institutions, diplomatic organisations, and sovereigns across Africa for RMB, giving him the credibility and the knowledge to lead this esteemed panel that I shall now hand over to you, Titus, and looking very much to hearing from you and the panel. Thank you.
Thanks, Sarah. Maybe just to introduce my panel as well. I'm sure some of the faces actually don't need introduction, so I'll start on my extreme right. Mr. Sanjeev Gupta, who is the Executive Director and Head of Financial Services for the AFC, responsible for Treasury, Trade Finance, as well as syndications, country relations, and corporate advisory lines. On my right again, I have Miti Nojwe, who is the Director of Investments and a member of the Financial African Services team at Leapfrog Investment. He's responsible for executing private equity investments across the continent, leveraging growth and impact opportunities. Now, if I go to my extreme left, so I have Mr. Terry Antoinette, Managing Director for DTS International Middle East, chartered accountant with several experience in financial, regulatory, and taxation-related management. And then I have John Fisher, who's the Chief Investment Officer at Axion, really responsible for making equity investments in financial services across the continent. And then next to me, Georg Weber, who's the incoming CEO for MUA in Mauritius, bring many, many years of experience with the Allianz Group. Really looking forward to having a very good discussion on this panel. I think, being at AFSIC, really being centered on the continent and the topic that we've been given in terms of, this is Africa's century. Sanjeev, maybe I'll start with you. Given that you sit with AFC, perhaps you can just tell us, for a couple of years now, we have been having this discussion on, Africa rising, Africa emerging. What has been the AFC's experience, and also maybe if you can touch on one of the success stories?
Okay, yeah, so can I be heard? Yeah. Hi, good morning, everybody, and thanks for allowing me to set the stage, no pun intended. So from our side, one of the things that we like very much to insist upon is this whole narrative aspect of Africa. I mean, one gets continually tired, frustrated, angry almost, to listen to this uniform narrative that Africa needs help, Africa is fragile, Africa is risky, Africa is corrupt, and so on and so forth. So I think for practitioners like us who operate in Africa, and I like to say it this way, that for us here, Africa is not an asset allocation game. It's the only reason we exist. And therefore, for us, it is cold comfort or futile even to think of the issues that confront the mindsets of global investors, because it's what it is, and we have to deal with it, correct? So one of the things that we like to do and been doing quite a bit is to try and turn the head around the narrative. And rather than saying Africa needs help, I think we must take a pause and say to ourselves that Africa is a solution to the problems of the world. And I'll give you examples. Food security. If you really want to be food secure, you've got to look at Africa. Energy security, which thankfully has come home to roost, albeit with very weird reasons behind it, where suddenly energy security is more important than renewable energy in its own right. Third is this whole issue of renewable energy itself. The world forgets that if it's going to go into the renewable sort of way, it needs certain mining minerals to happen. And where is it going to come from? From Africa. And the fourth and the most important thing is in the current global narrative about friendshoring, inshoring, nearshoring, diversifying your supply chains, where is it going to happen if you're not going to industrialize Africa? So from our point of view, Titus, as AFC, it's not the money we invest, it's not the risk management we kind of focus on, but it's also about making the investor mindset change so that capital can flow with the conviction that if capital is patient, then capital will make money. If capital is opportunistic, then capital will not make money. Thank you.
Thanks, Sanjeev. I think that really leads us into very good conversation, getting the African perspective. And Terry, I just wanted to come to you, looking from the outside in as outside capital, having heard from Sanjeev. What has been your experience? And what have you seen as impediments to the continent rising?
Thank you, Titus, and good morning, everyone. So coming from an outsider's perspective, because I've hardly spent time into Africa, really. But from an outsider's perspective, when you look at it, investors in general would look for certainty into their investment. What I mean by certainty, they want to be able to track their investment. They ought to be able to track the returns they're going to make from it. And they want to be able to see to be clear about the rules and regulations into the country that they are investing in. And I must say today that this is something that is lacking about Africa at this point in time, where there's not enough done to the outside world to give a clear rules, a clear regulations in place for investors from outside. And I'm saying that I really think that Africa in general, and I take from what Sanjeev has just said, Africa needs some serious rebranding and serious rebranding, because most of the people you speak to from the outside, I'm not talking about people who know the continent, think about Africa as being one country with all the bad things that can happen to that one country. Poverty-stricken, wars, corruption. You don't want to get close to that. And I think we, the players here who know the potential of Africa, should talk more about the success stories of Africa so far. The likes of Rwanda, what they are doing is great. Botswana, Nairobi, Kenya, how M-Pesa was quite an innovative thing there. And also talk about Africa as having a plan, as 54 countries coming together with a plan, with the AU Agenda 2063. We need to start talking about this, because we are talking about 50 years ahead. We want people to be confident about Africa, and we need individually to start rebranding Africa and telling people about how great they have done in the last 50 years.
Excellent, excellent. Good points. Nitin, I wanted to come to you, given your experience, in investing in a number of countries across the continent, and picking up on what Terry is saying in terms of, clear regulations, but also the comment on rebranding. And the question I really have, based on the experience that you have on the continent, is it a question of rebranding, or is it a question of maybe telling the story?
Thank you, Titus. Good morning, everyone. So it's both, actually, right? Because when you're rebranding, you're starting from one point to, and then you change the narrative slightly, right? So what we see when we look at deals, specifically in Africa for Leapfrog, I agree with what Sanjeev had said and Terry, but the people are the ones who will be telling the story, right? I think there's a lack of emphasis on people, right? Because anyone can have a business plan, anyone can have an idea, but if you're not able to retain the people, right, they will not be able to tell you the story. So we as responsible investors or impactful investors, at the end of the day, we think of the people we are backing and the people who are being targeted for the specific services that any portfolio company that we invest in serve. So at the end of the day, it is people, it is talent. We've seen a lot of brain drain, if that's the right term to use these days. We've been spending a lot of time in Nigeria, a lot of time in Ghana, a lot of time in Kenya, and we all see people leaving, talented people leaving just because the pasture is greener elsewhere, right? Elsewhere outside of Africa, outside of their respective countries, right? So the question that we ask ourselves is, how do you really continue to build this brand or retell the story, right? If the people who are not really, who haven't been there from the beginning or part of the journey are moving, it does a different picture. It paints a different picture, right? Because at the end of the day, if you're investing in a certain sector, in a certain country or in a certain company, and you just see people leaving to Canada, the US, Asia, right? You start thinking twice as to whether you're backing the right horse, you're investing in the right country, do you have the right framework, regulation in place, do you have the right incentive plans in place for the company? So I think it all comes down to people, as cheesy as it may be, but people are the ones who will be driving value. People are the ones who will be telling you your story, and people are the ones who will be the bridge between yesterday and today and the future.
Thank you so much. You touched quite on an important point, and maybe what I want to look at here is I was reading an article written by the UN where it's saying that, Africa is actually the only continent where the population is growing. And if you compare that with Asia, which is probably the closest comparable continent, at the moment, Africa contribute about 14% of the working age group, Asia at about 42%. And it's expected that, by 2055, Africa will contribute about 42% of the global talent. And the one thing that's really on my mind on what you're saying is, if we're looking at the continent rising, maybe the capital need to decide, do the talent need to go where the capital is, or does the capital need to come where the people are? Now, John, I wanted to actually come to you, just given, all the work you have done across the continent. And the question that I have in my mind is, one, in terms of, finding the right talent and keeping the talent on the continent, and really, how do you then de-risk the process and entrepreneurship in such a way that, what you build up on the continent actually stays on the continent, and the continent gets, the benefit from that.
Thank you very much, Titus. I think as Action, we invest in financial institutions that are in the process of digitizing. We invest in seed stage, growth stage, fintechs across the continent. And we see huge amounts of entrepreneurism. I think the last statistics I saw through the first 9 months of this year, $4 billion of funding have gone to startups in Africa during this year. We'll have to see how the retrenchment throughout VC funding affects the continent. But while that's about par with last year, it's double what pre-pandemic numbers are. So we do think that part of that rebranding story, that understanding that Sanjeev talked about and Nitin talked about is already happening. People are seeing opportunities. And it is a question of how do you help entrepreneurs take the risk out of that very difficult move to give up their day job, start something on their own, and really, unfortunately, most of that funding is going to 4 or 5 countries where there is an ecosystem, and perhaps this goes to Terry's comments of those countries that have built up regulations, that have built up stability, that have been forward-thinking in terms of how do you support digital financial services. All of those things are the ones that are attracting capital. So I think it is a combination of a couple of things that people have said, is that story can be told, can be retold, and people are excited about the opportunities. It would be great to see it be more democratized across the continent into other countries, and we think we have to figure that element out. But I think one of the interesting things we're seeing is the propensity of a fintech in a country, once they establish a beachhead, to start looking at neighboring countries and so on. So I think there is an opportunity for that entrepreneurism to expand out from certain core centers, South Africa, Nigeria, Kenya, Senegal, Egypt, into neighboring countries, and thereby support the whole continent in rising.
Sure. Thank you. And obviously, for the continent to rise, for anything to happen, you need to find the finance for that. And George, I just wanted to come to you, from an insurance perspective, what have you seen on the continent?
Yeah, I think that insurers have a very important role to play when we talk about potentially the 21st century being the African century. Most of the African states actually welcome insurers to them, and for several reasons. For me, the 3 most important would be, first, insurers are helping African states to, well, sometimes even replacing African states in providing what for Europeans are public goods. So if you're a British citizen, if you're a German citizen, if you're a French citizen, and basically you think about who finances the healthcare system, who finances or who gives old age income to citizens once they retire. Well, for most of the citizens it's Social Security who is doing this. Now in African countries, there are no is exaggerated, but there are much less established social security systems. So if the African population, which today is on average 20 years old, or even less than 20 years old, fast forward that in the future, and that will still be in this African century, who's going to pay for all those people once they are no longer able to work? And insurers have a role to play there via health insurance, via pension insurance, etc. The second thing, and that's often overlooked, is that insurers are amongst the biggest collectors of financial funding. They are huge institutional investors, very often not doing it directly, but passing via funds who invest there. But the collection, which comes from, in general insurance, the premium being paid before the claim is paid, but much more important in life insurance, people often saving for 30 years until they get the money back. That gives them huge funds which are to be invested. And in Africa, the governments, rightfully I think, insist that the vast majority of those funds are invested locally in Africa and in the country where the funds are collected. Invested in treasury bills of the country, thus financing the debt of the country to a good extent, financing companies in the country, going via private equity investments, going into infrastructure investments. And the third point, and which is probably in the long run the most important point for me, sorry for that, is that, that there's always the insurer joke, yeah? Life is risky. Now, if you want to develop the economies on a continent like Africa, which is probably more risky than other regions of the world, you need to find a way to deal with risk. You know, if you have a Tanzanian farmer who ponders whether he should buy 2 additional cows, which might be an investment, a huge investment, maybe the biggest investment he has ever done in his life. And there's a chance that maybe 20% statistically next year there's going to be a drought. And if there is, most probably his cows will die. You know? Will he actually bank the livelihood of his family into that investment? Or will he rather say, no, I shy away from that, I don't do that? Once again, if you're in Europe and you have comparable cases, if there's a pandemic coming and basically you are out of business for a couple of months, then either you have some savings which you can assess, or you have a bank where you can go to, or in the case of the pandemic, we all know, the states which have very deep pocket and a capacity to take on debts, they will jump in. Well, for the Tanzanian farmer, that's probably not be the case. Yeah? And here is a role that insurers can play, sometimes together with states, of catering for those cases, and by doing so, enabling people, entrepreneurs, farmers, all kinds of entrepreneurs to take risk and therefore to invest.
Thank you. So probably the key word I have heard here is risk. And Sanjeev, I'm actually thinking of you as some pondering on this. And for me, I'm always wondering, do we call it a risk? Or do we call it the credit quality of whatever we're working on? And maybe, from your perspective, what I really wanted to hear is, do you think there's a mismatch in terms of, the expectation from, the resource owners or the asset allocators to essentially what's happening on the ground?
Yeah, so, it's a fact. It's not something that I'm conjuring up to tell a story. But if you take the trouble to read at actual project default rates, credit default rates, the actual experience of investing in Africa, it is one of the top regions in terms of what you get and what you don't lose. And this is not me saying it. There are reports out there. But equally, and I'll just tell you this because AFC is rated A3 by Moody's, which is like the 3rd best rated institution on the continent, investment grade and all that. When we go to raise money, and we do a lot of raising money, we raise anywhere between $2 to $3 billion of new cash every year from across global capital markets. We pay what I call an address premium. I mean, I can call it prejudice premium, but politically correct is address premium. And that is a fact that even today, in spite of data glaring at you, staring at you, telling you that investments can be done and can be done profitably, the general consensus is around an overrated risk perception, right? And I was at a conference 2 weeks back at the United General Assembly where the title of the panel was Investing in Fragile Markets. And there was a very young, enthusiastic guy who said a beautiful thing. He said, how do you expect risk premiums to go down? How do you expect investors to come to Africa when you're actually creating a title called Invest in Fragile Markets? It's a bit like saying, come to the US, they invest in declining empires. He said it. It was like amazing. So what I'm trying to say is that fortunately, recent events have proven, Titus, that corruption, presidents not wanting to leave office after being de-elected, fraud, corporate misrepresentation are not the monopoly of Africa. It's actually a trick that we are yet to learn from the West, right? And that's true. So going back to what you said, we believe that this rhetoric will get us nowhere, right? I can talk about it, get a few laughs from you, and thank you for that. But essentially, charity has to begin at home for us. So we decided, therefore, a long time back, that listen, the only way we're going to change the perception is by doing things and showing that things can work, correct? So we have a very simple philosophy. We do what we call early stage project development. We take all the risk, we absorb it. Then we, after have developed it, we de-risk it. And there are ways to de-risk it, insurance being one. There are many other mechanisms, there are actual case studies. And once we have de-risked it, we distribute it. And I kid you not, the amount of assets that we have developed, de-risked, and then distributed to European pension funds, European bond managers, family offices is incredible. So there is money out there. Obviously there is. And there is returns out here. So we have to play that role of being that bridgehead, which is a role we take seriously. Quick point, therefore, happy to talk to anybody after the session, that one of the things we have decided is that the biggest risk of investing in Africa is not investing in Africa, right? Whether it's the whole human aspect of it, or whether it's the whole other challenges that come with it, including fundamentalism, terrorism, and what have you, right? So we have decided that we can't talk about de-risking till we have developed, which is, again, why one of the focus areas for us today is that when we invest in a mine, or when we invest in anything to do with primary extraction, be it timber, be it cocoa, be it cotton, we are spending time and money to add value and create a more value-added export by creating processing industries. So we are discouraging investments only in primary extraction. It has to lead to processing and value-added because that de-risks the project, it adds export earnings, creates jobs, and therefore reduces the risk perception. Because risk is not a term in vacuum. Risk is a combination of so many things that, going back to first principles, as I said, charity has to begin at home. We have to make African capital work for Africa, which is another reason, Titus, we have been mobilizing African pension funds to come and invest with us. Hitherto, they haven't. But we have to de-risk it for them so that they come in. So that's how we deal with it, Titus.
Good,
Thank you.
Good. Bridging the gap, that's what I heard from you. And John, I'm probably going to pick up one of the points that Sanjeev was making, and really thinking, when you think of bridging the gap, one of the things I think it's really financial inclusion and the role that fintechs and other role players plays. And I know that you've been very active in that space. So maybe you can just touch a little bit on how do we actually bridge that gap, or maybe you might say that there is no gap to bridge at all.
I think in certain countries the gap has diminished greatly, and I think 2-3 years ago we were seeing a gap where people were afraid. This was new. They didn't understand the countries. I think now people see the opportunity, especially at the early stages. They see the dynamism, they see the entrepreneurship, and they see the market size, and all of those things come together to mobilize capital for those markets. And so I think for me, the question is really how to extend those gains in this time of retrenchment where people are taking a step back from markets. That's my big worry, is that the gains that we saw last year, this year, people move away from, and they concentrate on other markets in Latin America and in Asia, or back home in Europe and US. So I think maintaining those gains and then expanding them outside of the 3-4 different hubs that we've seen emerging. And there, I think it is, in my mind, much more the locally grown entities that can take an idea, develop it in one country, and are much more suited to extending it out to other countries that perhaps have smaller market size, have different dynamics. Clearly, any geographic expansion, especially in a continent as diverse as Africa, brings risk. And so it can't be just assumed that because you're coming out of Nigeria, you understand Ghana, you understand, and that I think is a trap that some entities fall into. But I think with the support of people who have overseen global expansion, international expansion, I think that is a key thing to make sure that we can reach some of the markets that wouldn't be reached directly from investment from outside.
Sure, sure. Thank you. I wanted to touch a bit on, reaping the demographic dividend, and I wanted to get an outsider's view, and then Nitin, I want to come to you on an insider's view as well. So maybe, just from your side, Terry, do the, outside capital sees the, the population growth, the resources that are available on the continent, the opportunity, which is also a market that's growing. What's the view from the outside? Do we see this as, a benefit, or do we see it as a challenge? And what can stakeholders actually do to remove any impediments that are there?
Thank you for that. I think it's more seen as a challenge again. Maybe I'm painting a really black view of Africa. But the thing is, the main question now is, yes, there's a big youth population. It's growing. It's going to be very important into 2050. But if this is not put to good use, and if the capital doesn't flow in, and if infrastructure is not built, you're going to end up into a big problem with a lot of people unemployed. And to go back on what Nitin said earlier, I think the key here would be to enable free movement of workforce within Africa. I think that's one of the points in the Agenda 2063. Why this is important is, one, you would stop that exodus of talent to the north, to Europe, to America, etc. And then I think the most important thing would be having that free movement over risk for countries to lose talents to the other country would push actually those countries in Africa to actually offer better infrastructure, more opportunities, have a bigger value proposition, if you know what I mean. So I think that the free movement through either, you name it, free visa for Africans into Africa, or the long-awaited African Union passport, would really ensure that we at least keep the talents. And then obviously there's a lot of work to do as well, again, to bring the capital in, to be able to put all this to fruition.
Sure, sure. What I hear from you is, we need to go beyond talking and executing. Nitin, I'll come to you from the inside. What's your view?
Yeah, so I think from our perspective, there's millions of customers out there to be reached, whatever product you're looking at, right? So for us, for example, Leapfrog, when you look at an investment, we look at reach, right? Reach, whether these are emerging consumers or otherwise. And technology takes and plays a very big part of this reach, right? So I think at the end of the day, it's critical to identify the right segment of the population that you're targeting, and making sure that you spend enough time around understanding these customers, right? Understanding your end market, because if there is no, let's say, user experience or user understanding, nothing is going to work, right? Whatever technology you invest in is not going to work. So for us, I think it's really reach through technology, and better understanding your customer base through enhanced customer experience, because as I said, no company is going to survive if you don't understand the nitty-gritty of what the customer needs, and most importantly is also to retain them, right? Because you want to grow you want to enhance your reach, you want to improve on, we spoke about, enhancing scale, right? So it's making sure that you understand your end users and using your capabilities, whether it's technology, whether it's insurance products, whether it's otherwise, to reach and serve these customers and making sure that they are happy and they come back.
Sure, thank you. Sanjeev, if you indulge me, I wanted to just quickly come to you before I go to Jörg. And the one thing I'm really thinking of here is the Africa free trade and as well as the Africa interconnectivity. If we look back, a couple of years and then looking forward, what has been the key critical achievements and what can we do to actually make sure that we bring the Africa free trade into fruition as financiers?
Yeah, okay. So, I think everybody kind of knows that intra-Africa trade is virtually negligible, right? I mean, one mustn't even try and quote any figures to try and impress anybody. And there are fundamental reasons for it, right? Obviously, this free trade agreement is being touted as the panacea for everything, the solution, the catch-all kind of way of getting Africa going. But to me, while it represents a huge aspiration and a rightful ambition for Africa to trade between itself, the key issue here, we mustn't forget, is firstly the infrastructure challenge, right? And again, I don't want to sound glib about it, but we have all heard that it's cheaper and quicker to bring something from China to Africa than from shipping it within Africa, right? So we know that. So infrastructure being rail, logistics, cold storage, energy, etc. But there is also another key issue which we must not forget, which is the point I was trying to make earlier on, that for a region to trade between itself, it has to make things that the other neighboring country needs, right? If you are making primary cocoa and somebody else is making primary cocoa, you're not going to trade cocoa between yourselves, right? So how do we make zones or regions collaborate? And I use the word collaborate very deliberately because, as you know, Africa is blessed with huge amounts of shoreline, right, coastline. Now, every country I go to, and I'm probably exaggerating when I say every country, but virtually every country, wants to build its own port, own airport, own special economic zones, own logistics. Each country wants to be the hub for Africa. It's not going to happen, right? So it is up to us as institutions to drive home the fact that you need collaboration and coalition between countries to create a common logistics, common infrastructure solution, and a common set of processes that allows you to trade between yourselves. So what I'm really saying, therefore, is I'm not trying to be very esoteric about this, that if we are going to use Africa as a way of trading between itself as a means to get more prosperous, we have to build the infrastructure, we have to harmonize the laws and regulations, and most importantly, we have to do value-added processing of primary goods within Africa. And by the way, I will not let this go, so I'll say it, that one of the biggest issues that Africa faces, and you can just Google this, guys, is the legacy trade agreements that still affects African countries in terms of how certain primary exports cannot be processed in Africa, because if it is, then it is tariffed differently. These are legacy agreements. And individually, African countries, it's our failure, nobody else's failure, have not managed to collectively bargain and negotiate these things. And this is another fundamental issue. Okay, so that's how we see it, Titus. Thank you.
Thanks,
I can carry on, but
so maybe, Jörg, if I just come to you, maybe if you can, in 2 minutes, just exactly the similar question that I asked for Sanjeev. Maybe you can just chip in as well. What's your view?
Yeah, I haven't really thought about the question. Now, my reaction from what I've seen in the past is that when I was in Allianz Group, which is a very big multinational based in Europe, but which has actually representations in 12 countries. And we were thinking, where do we put the hub for Africa? At that point in time, the logical point to put the hub in Africa, for Africa, would have been either Dubai or Brussels. Because the linkage between the African countries on the African continent was so bad that logistically, to fly from Casablanca to Johannesburg, you would either need to pass via Dubai or via Brussels. And that's just an example. So I think for the time being, there is a lot of books, a lot of articles, a lot of speeches and agendas 2063 that you can read, which talk about Africa and the future of Africa, but it's a very fragmented continent. And if we want to make progress, that fragmentation needs to be seriously overcome. Right now, I see it much more as a collection of individual interests and individual countries.
Thank you. And probably touching on Agenda 2063 is a good way to kind of close off on the panel, right? And I just wanted to go across each panel member, and ideally not more than 2 sentences if possible. The one thing that really stand out on when I look at Agenda 2063 is, and I find it quite exciting, is when it speaks about working towards the Africa we want. And I think for all of us as stakeholders, the question that I have, and if you can just share with everybody in the room, to your mind, in not more than 2 sentences, what are the key things that we need to do to create the Africa that we want? I'll start from your side.
Thank you. So I'm a very big fan of the fact that we need that free movement of workforce. That's important. That's going to have a ripple effect. And secondly, clear regulations, clear rules within Africa that is well marketed or well communicated to the world.
I would add to that, I think the question of the education system and ensuring that that huge demographic dividend that there is sort of trained well for the future, for a digital economy, et cetera. I think we're seeing the beginnings of that, but I think a lot more needs to be done to make sure that that dividend does pay off.
Yeah, when I read something about Agenda 2063, it has a cultural, it has a political, and it has an economic component. In my view, the economic component is the prerequisite, because it needs to the other 2 need financing, and the financing can only come from that. Africa should focus on that and basically build an environment which is as close as possible to an environment which every investor would like. Security, no corruption, a legal system you can trust on, etc., etc.
I'm struggling here. No, I think the most difficult thing, I'm a bit pessimistic, but I'll take it on the chin, is a change in mindset, right? A change in mindset, because you can have a big plan, but if people do not change and agree to work together collaboratively and use the resources that they have, it's not going to work. So for me, it's really change in mindset across all 52 countries in Africa.
Yeah, so, for me, it's obviously 3 things. One is infrastructure. And, I just want to underpin that point, infrastructure, by just saying this to you guys, that that in Africa today, the rate of increase in population outstrips the pace at which traffic moves in some cities. So infrastructure is a key issue. The other is, energy, power. I mean, that continent doesn't have energy, right? And I kind of like to say it in this basis that nowhere else in the world are so many babies conceived in moonlight and delivered in moonlight, right? And that has to change, right? And the third is what I call the value added, the industrialization of Africa. It has to stop where two countries today, for example, Cote d'Ivoire and Ghana, produces 70 or 80% of the world's cocoa, and less than 10% of the chocolate value chain comes back to Africa. So value added, that's the other thing. Final comment, I try and stay away from saying this must change, that must change. Change happens when change is ready to happen, right? My job is not to tell people how to change. My job is to find money, develop investments, de-risk investments, and distribute investments. And that's how change happens. We don't have to go too far. You can see even in the developed nations, when personal economic interests are threatened, how little collaboration happens. So let's not suddenly make Africa a case study on lack of collaboration. Lack of collaboration exists everywhere. It's ultimately economic development that encourages people to share. And that's what we have to do. Thank you.
Thank you to the panel. I'm looking at my chair and I'm wondering if we can entertain one question from the room.
I think so. You run.
Yeah, thank you very much. My name is Oliver Guam from Guam and McBain Securities. My name is Oliver Guam from Guam and McBain Securities. The question we have is concerning like some of the policies or the issues that you've raised. How long will it take to sort of put this in process? And
Sorry, I'm not sure if everybody else is getting your question, and maybe it will just be helpful as well if it's the question for the panel or for somebody specific.
I mean, it's more for the panel, but I was talking about how long would the processes take and what can be done independently at the moment, to continue to grow the economy whilst these problems are being solved.
Sure. Any takers?
Sorry, what was the question? I could get. Can you paraphrase the question for me?
So the question, the way I understood it, is that what can be done now to grow the economy while we're sorting out all the impediments that have been, raised?
I think you'd have to see a recording of this panel. That was pretty much answered, I think. Thank you.
Anybody else want to try?
Yeah, I think in terms of how long will it take, I think that would be crystal ball gazing. Yeah? So I remember that, 25 years ago, I was discussing with somebody the future of Africa, and basically the hypothesis, it's going to take off now. It's going to take off now. We're sitting here, it has taken off a little bit, but it's not going like this right now. Yeah? In Southeast Asia, it took 30 years, but maybe that's rather a best case scenario.
And I see Sarah is giving us the eye that our time is up. Thanks everyone for joining us. Thanks to my panel.